Hello everyone, and welcome to this presentation of the correct way to trade pullbacks. Hello and welcome once again. Thanks for taking time out of your busy, I'm sure busy Wednesday afternoon to join us. My name is Steven Primo. I am the president and founder of Specialist Trading, and I want to thank you for coming here today. We're going to talk about pullback trading, probably a very popular way to trade. In fact, most people do like to trade pullbacks, but probably one of the most misunderstood and incorrect ways in which to trade. Most people are using pullback trading almost as if they're picking tops and bottoms, which we really don't believe in here at Specialist Trading. Now, for those of you who are new to my website, we are an educational company. That's one of the things I want to get straight off, right off the bat. Even though we provide our students and our members with signals and with strategies to trade, we're really about empowering you with all of this information so that you can make your own decisions. Most people really lose in the markets trading today, in our opinion, because they're giving their power away to someone or something else, either too many indicators or some system that they're trading or some trading guru that they're taking all of their signals from. What we try to do at Specialist Trading is take all the information and things that I've accumulated in my 37 years of trading and then fit them and mold them so that you can take these things that I've learned and hopefully be able to trade and get on that road to consistency. Now, as I stated, I have been trading for 37 years. I started on the floor of the Pacific Stock Exchange. I traded through the crash, through the bull market that ensued after that, and I left the floor in the mid-90s to manage money and to trade my own account. Roughly about 6 years ago, I started Specialist Trading, where all I do is teach and mentor my students with all of the personal things that I use in my own trading. So as I stated, we're an educational course and class, and we just want to teach people how to empower themselves with all the tools and tips and the trading strategies that I've accumulated in my career. Now, as we stated, we're going to talk about pullback trading, the incorrect way and the correct way to trade pullbacks. But before we begin, we're required to show you this. Please take a moment to view our disclaimer. I'm going to show you a lot of performance results with this technique for trading pullbacks, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated. So as you're taking a moment to view our disclaimer, I'd also like to mention that I try to run my presentations. If you haven't attended my webinars before, I try to run them as if we're in a classroom. So if you have a question, please wait till the very end. We have reserved about 10 or 15 minutes at the end of this presentation to answer and go through any questions you may have. In fact, there's a little box that I have to open up to see your questions and answers, and so I'm not even going to open that up. So if you ask a question, I won't even see it. So please wait till the last 15-20 minutes. This won't be a real long presentation, so we'll be able to go through all of your questions and answers. As you see here underneath the chat box on your right, you should see a phone number as well as an email address. We'll give that to you as well at the very end of the course, so you can call and speak to anyone personally if you'd like to ask a question that way, okay? So probably the most asked question is this being recorded? And yes, all of my presentations are recorded, so you can contact that phone number as well as email address, and we will send you a link to this recording if you have to happen to leave early, okay? So once again, save any questions, any and all questions to the very end. Now, and also one last thing, I'd like to invite you all to follow us on Twitter. We just started this about 2 or 3 months ago, so we're fairly new to it, and we post a lot of free and great information. We post signals that have been generated in the Forex, the stock, and the E-mini markets. So it's a lot of great information. You can follow us at SPCLSTTRADG. That's our handle for Twitter. So I invite you all to come there and get a lot of great information, and you can see exactly what positions we may be in at the moment and what things we may have gotten out of as well. All right, so why don't we begin? And as I stated, we are an educational company. I feel the reason why most people lose in the markets is because they're relying on outside sources to get their information. Many people are in too many trading rooms and chat rooms. You're relying on too many indicators. You're watching too many so-called trading gurus on TV. And then ask yourself, how has that worked for you? Are you more successful than you were when you started using this thing? In my opinion, probably not. And I speak from experience because I used to rely on these myself when I first started trading roughly about 37 years ago, and it didn't help me. So I learned a lot of things from my mentors who were specialists themselves on the floor of the exchange, who taught me how to be consistent. And what they really stated was, Steve, the road to consistency is paved in simplicity. So what traders usually do is try to overcomplicate their trading. They follow too many services, they get involved with too many markets, they're trading too many things, they're using too many indicators, and it just jumbles up and complicates your trading. So what my mentors taught me was the simpler your trading plan is, maybe 3 to 5 rules, the more you'll be on that road to consistency as opposed to the other way around. So what we try to teach people is to keep things as simple as possible, not a lot of rules, not a lot of indicators, not a lot of high, thought out process of million and one type of systematic type of things to follow. We really try to keep things as simple as possible. And that's what my goal is, to teach you how to trade with the specialist edge, which is rooted in simplicity. So here's what you're going to learn today. And once again, should you have any questions, please wait till the very end and I'll answer all of the questions at the end. We are going to show you the wrong way to trade pullbacks. We're going to start out with the way most people trade pullbacks, and we feel, in our opinion, it's incorrect. And then I'm going to show you a simple but high probability technique for trading pullbacks in all markets and in all time frames. So this is a great technique that should you become a member of Specialist Trading, you'll be able to really use this in its entirety, and you'll be able to take the course that teaches how to trade this in detail. All right, so let's start out with, for those people who are unfamiliar and not really well versed in how to trade pullbacks. First of all, you need to find the trend. You need to be in sync with the trend. And what a pullback states is, if you see most markets, when they are in a trend, they have this kind of stair-step look to them. They, in this instance, we are going up, so it's an uptrend where you go up and then you kind of sell off and pull back within that uptrend. And the same thing happens with a downtrend. You're in a downward motion, but then you have an up move or a pullback to the upside. Okay? So what most traders try to do once you found the trend is you're looking for these particular scenarios, okay, where you can purchase if you're in an uptrend or sell if you're in a downtrend at specific levels. Now these levels are during the pullback. So what happens most of the time is through conventional wisdom or courses or different types of techniques, we'll look for a specific level based off of some type of retracement or some type of number or some type of level, and we'll see that price stops right there and then it continues on its upward way. So this is the basis of pullback trading. Now what happens again is once you're still in that trend, you will see a sell-off or pullback once more. It'll meet the same proportional levels as we did here, the same percentages or whatever technique you're using. So this time you'll jump in again and you'll buy, and then this is what usually happens. Okay, I'm sure this looks familiar to a lot of you because it probably happens. It used to happen to me all the time. It still does occasionally, but not consistently. But this is what happens when you're trying to pick levels or use conventional wisdoms for trading pullbacks. And the same thing works in a downward scenario. You'll have a downtrend, and then you'll have a little rally in that downtrend, which signifies your pullback area. So it meets all the rules and regulations, everything you've studied, so this is where you should sell, and then it continues lower, all right, until you try it again. It meets all the requirements. It gets up to the same level or same percentage level, so you sell, and then look what happens. It continues going higher, so you give everything back that you just made on the previous trade. Once again, this is the problem with pullbacks because most people trade them this way. Here's what most people use for finding those levels in which to buy in an uptrend or to sell in a downtrend. First thing is support and resistance. Very common. Most people use this in their trading if they're using daily bars, not so much intraday, but they still use it for daily bars. A lot of Forex traders like to use support and resistance. And this is the way support and resistance basically looks. That if you have a perfect case scenario here, in an uptrend, you meet your resistance, you come down to support, and so on. And all these support levels are your perfect place to purchase on an uptrend type of pullback. So if we see here this example of this generic chart just for educational purposes, we see here that we have almost a mirror of the example we gave where we have these nice pullbacks and uptrends. And so conventional wisdom would tell us this is where support is. So this is where you want to buy if you get down to this level anyway on this uptrend pullback. So you place a limit here to buy, and guess what? It doesn't hold. But then you say, well, I went back and read the book, or I went back to the trading room, and the guy says, well, maybe this is the support. So this is where you should buy, and you're going to buy more. And guess what? Okay, look familiar once again. Remember, these techniques work until they don't work, and then you give everything back. They work perfectly here, but in this scenario and in this one, it didn't work. How about Fibonacci levels? This is another technique that a lot of people use, and especially with stocks, a lot of people like to use Fibonacci levels. These are certain levels that have been designated at places where you will find so-called support and resistance, but they were at these certain Fibonacci levels, different Fibonacci numbers. So one of the most common is roughly about 61 or 62% retracement. So what this means is if we were in a downtrend here, we are retracing or pulling back. In other words, for retracement is pullback. We're pulling back to the upside in this downtrend here, as you can see, and we want to come up to that 62% level, which is very common, very commonplace of where you would find some type of Fibonacci level. So this is where you would want to sell in a downtrend. So you decide to jump in and sell, and guess what? It works perfectly. Okay, that's fantastic. You love this Fibonacci stuff. It's just the way they described in the book or in the course you took. So you're still in a downtrend. We've had now another major move from here to here. So when we get back up to 62%, you're going to sell again. Why not? It worked before, right? So we wait for price to rally, gets right back up there. So you're starting to really lick your chops and say, boy, this is going to be great. It's going to go straight down again. But guess what? It really doesn't hit the top the way it did right here. So you kind of hold off and wait. And you decide, well, you know what? I've got some extra money to work with on that last trade. 75%, 3/4 of the move is a good level to sell as well. So maybe I'll sell a little more. And this way I'll make even more money. So you sell a second lot here. And it still doesn't go down, but it hasn't gone up either. It's kind of just wavering. So you think it's going to roll over until it finally starts to make new highs. See, once again, these techniques work until they don't work. Now, I'm not going to say that people cannot make money off these. In fact, I know personal traders that trade these two techniques that do very well, trading support and resistance and trading Fibonacci levels. Here's the only problem with these things. They're extremely difficult to teach. In other words, if you're successful trading these, I would say continue to use them. That's great. That's what works for you. But remember, as I said in the first opening statement here, we are an educational company. So I want to educate, a group of people, a large amount. I just don't want to educate those people who are able to see these levels and those who can't find them. So when we use things at specialist trading, we want to use things that are more cut and dry, something that the masses can use, that everyone will see and understand, not something that's just subjective that works for a few, but the others can't figure out how to find it. Remember, if we're looking at an uptrend, this is what usually happens. This will work for a while until it doesn't work, and vice versa. So how do we alleviate this? How do we actually trade how do we actually trade a pullback in an uptrend and a pullback in a downtrend? Well, we just showed you two ways in which we feel are incorrect. Once again, they can work for some people, but these people have kind of an inner chart. They have an inner discipline where they're able to spot these really nice levels, whereas others can't. So we don't want something that's that difficult where one person sees one thing and another person sees another. We want something that is more cut and dry. So how can we do that? Well, we want confirmation. How do we get confirmation? Well, this is the correct pullback type of entry point. Now, if you read this, it states entering a trade based off support and resistance and or Fibonacci levels is similar to picking tops and bottoms. These are extremely difficult techniques to master because they are very subjective. Once again, some people can and do make money trading these techniques, but it's extremely subjective. We want something that is not subjective, that is more cut and dry. So in order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So in other words, rather than try and place your bid or your buy order where you think we've reached that specific Fibonacci level or that support level and hope that it holds there, let's wait for confirmation that the market is going back in our desired direction, either up if we're going long or down if we're going short. So how do we do that? Well, let's look back at this ideal situation again here. Now, as we see here, here's the common pullback. And now we have another scenario to buy right here. Now, rather than just place a limit order in there and hope that it stops, let's wait for a price to go back upwards in our direction. Just a small amount according to the rules. But this usually is a confirmation that we're going higher. And this is where we decide to buy once it's going in our direction. In other words, it's just like a train leaving the train station. We want to jump on board once we see that it's headed in our direction, and it's a high probability that it will continue. All right, not promised, it's not guaranteed. Nothing is guaranteed in the trading of any market, but we now have a high probability entry. Same thing on a downtrend. Rather than just try to hope that it holds the same requirements and the same levels that it did before and place a limit sell order there, why don't we wait for a confirmation that it's headed in our direction? And once we see that the train is going south where we want it to go, that's when we jump on board and sell, and we have a high probability entry because most likely it will continue going. All right? So what are these uses of confirmation? What are the most common ways to confirm that it's going in our direction? Well, these are the most common types, and you may want to write these down or explore them. These are the types of confirmation where you can see that price has resumed its direction, the direction that you want it to go. First of all, we see that price trades above the previous, above or below the previous bar, depending on if you want to go long or short. Let's just say we're in an uptrend, all right, and the level of which you think it's going to hold is roughly at 50, okay? So we don't want to place a limit order there. We want to see it trade above the high of that bar. Let's say the high of that bar was 51. So we want to see it trade at 51 and one tick above, maybe 51 and 5 cents or 51 and 10 cents. And then that's where we decide to enter. This is our confirmation that we're going in the desired direction. Why? Because it traded above the previous bar. And we just continue to track it until we trade above the previous bar. All right. Now, if we're going short, let's say we wanted to sell at 50. Let's say it's trading at 48, and it starts to rally to 49, and it rallies to 50. Okay. Now, rather than place a limited order to sell because it may continue going higher, let's now say, all right, it's got to trade below the low of that day. If the low was 49, well, it's got to trade below 49 on the next day. All right. So these are ways that we confirm that it's going in our desired direction. Another way is a candlestick pattern. I know a lot of you trade candlesticks. Candlestick patterns are great because they many of them are basically reversal patterns, and they will show you when something has reversed, such as a engulfing pattern or some type of doji. So many times, if you'll find these, we're not going to go through. This is not a course in candlestick patterns, but if you know how to trade candlesticks, or you do a little research on your own, you'll see these type of turnaround techniques for candlestick patterns, these reversal patterns. So look for a reversal pattern before you enter. Okay. So rather than just say, well, it's going to stop here, I might as well buy, look for a reversal pattern, a two-bar candlestick reversal pattern, and that usually will be a great indication that the trend is headed in your direction. And then lastly, there are a number of indicators you can use. Stochastic momentum indicators, okay? Once again, this is not a course here, we're talking about indicators, but many times you will see that even when, let's say you're following a pullback and you want to buy it, perhaps the indicator is now turning around and telling you that the momentum is headed upwards, so you can use that as your confirmation, as opposed to try and pick a bottom or a top. So these are the main types of confirmation that you can use. Remember, once again, if you're buying, you want to see that price trades above the previous bar's high. Not above that bar, but above the previous bar's high. And continue to track that until it trades above, okay? Or look for a candlestick pattern, some type of engulfing pattern or some type of reversal pattern that tells you that this little sell-off or pullback has concluded, and we now have a reversal pattern that is telling us most likely we're going to be headed higher now. That's your confirmation. And then lastly, an indicator. Many times the stock or the market you're following, the E-minis, will continue to go lower, but the indicator is now flashing a positive type of momentum. So that's your signal to get in. These are all your standard types of confirmation. Rather than just picking a top or bottom, we want to use a confirmational technique to tell us it's okay to jump back in the pool. Okay? See, most people jump back way too early. They're trying to pick a top or bottom of that pullback, and that's where you lose. It'll work for a few times, but the times it doesn't work, you give everything back. So you want to wait for this confirmation to jump back in the pool. It's telling you it's okay. This is not a guarantee that we will continue, but you've just upped your chances and giving yourself a higher probability for success. Now, what do we feel, in our opinion of specialist trading, is the best use of confirmation? Well, it's something that we have and promote and teach. This is our PET D tool. We feel this is probably the best, single most best tool you can use for confirming any type of pullback trade. In fact, any type of trading strategy or system that you may have. Now, what exactly is the PET D? Well, it's abbreviated for the Primo Early Trend Detector. It's something I was taught on the floor that at the time, 30 years ago, I had to put this together by hand, so there was no way I could use it intraday trading. I could only use it for daily bars. But with the advent of computers, high-speed computers now, and with great graphics that we can use, and with programmers, we have turned this into a proprietary color bar algorithm. It's extremely simple. It's based off momentum, but at this point we're keeping it proprietary because we just want to keep it in-house. But let me show you how it works. When you see a series of green bars, it's telling you that the short-term uptrend is in place, okay? So it's telling you that we have a short-term trend identification to the upside. Now conversely, when you see a series of red bars, it's telling you that the short-term trend has been identified to the downside. Now this is a short-term trend, not an overall trend, but a short-term trend. So this works as a fantastic way to confirm that the short-term trend is now going in your desired direction. So how do we use this? Well, pullbacks. Well, here's the best way we know how to use it. Here's for a buy pattern. In other words, you have an uptrend, and usually with the PET-D displayed on your screen, a small amount of red bars will appear from time to time. All right, you're in an uptrend, but you'll see anywhere from 2 to 3 smaller amounts of red bars. The next green bar that appears is your confirmation for a buy entry. That's how easy it is. Let me show you an example here. This is an older example of Facebook. We're in an uptrend, as represented by all the green bars here. But as we stated, even in an uptrend, from time to time, you'll see a small amount of red bars. Okay, this is your pullback. Now, we want to go long on the first occurrence of a green bar. So this is our confirmation. We're going to go long on this bar, and look what happens. Okay, isn't that a great confirmation that the pullback has concluded? And rather than just try and pick a bottom, because we don't know when this is going to end, this could have kept going lower and lower and then turned into a totally different trend. We want confirmation. That's our first green bar, and we went roughly up from 38 all the way up to 45 or so. Now, the same technique works for pullbacks to the downside. All right. Now, say you're in a downtrend. In a downtrend, you have the majority of the bars are red, but you'll see a small series of green bars, and it'll appear from time to time. So what you want to do is, when you see the next red bar appear, that's your confirmation to sell, to go short. All right, so if we look at this example here, an older chart of the E-mini, we're in a downtrend. We have a confluence of red bars here. And as we stated, you'll see a small amount of opposite bars, the green. All right, this is our pullback to the upside. Now we want to wait for the first red bar to appear, which is right here. So that's our confirmation that the pullback to the upside has concluded. So we go short, and look what happens. And we get another occurrence here. Now we have another pullback to the upside, followed by more green bars. Here's our first red bar. We sell again, and you could have even taken this smaller one right here. You see how simple this is, because the PET-D, which is a short-term trend identifier, is telling you when that pullback has concluded, and now it's time to get back in because the trend has continued in your desired direction. All right, so let's look at some current stock examples now. Those examples were for educational purposes. They were older charts. Let's look at some charts that were taken, some snapshots that were taken up to yesterday. All right, so here's a picture, snapshot of Dow, the chart of Dow. This actual snapshot was taken yesterday. Now the trend is up, obviously, and the easiest way we know how to see what the overall trend is by using the 50-period simple moving average. We call this the buy-sell line. When price is above this 50-period simple moving average, it's telling you to only look for buys. We are never even going to consider going short or looking for some type of topping area. We're only going to look for pullbacks to the downside, and then we're going to look to buy because we're in an uptrend. All right? But we haven't added the PET-D, so it's easy to see in hindsight that, oh, okay, this ended here. I should have bought here. I should have bought here. I should have bought here. I should buy here. But that's in hindsight. How could we have known in real time? Well, we add the PET-D. Because we know we're in an uptrend, we're looking for a series of red bars, as we see here. And the first green bar is our signal to enter. So that's where you'd buy. And here you would have bought roughly at 43. And look at it, you went up to 47 in roughly 2 or 3 days. Now you have another pullback. Here's a series of red bars. And then you purchase on this first green bar. And look at the nice rally it had. You have another pullback. There's a green bar right there. And then look what happened yesterday. The snapshot was taken at the close of yesterday. We see here that we had a pullback in place, and then yesterday would have been your signal to go long down. Why? Because that was your first green bar, and this is the signal that the pullback has most likely concluded. Now, this is not guaranteed, but feel free to follow along. I believe Dow is up a little bit today, and feel free to follow this in the next 2 or 3 days, and you'll see how powerful this technique is. We look at another current chart here in stocks, NFX. Now we ask ourselves, where is price in relation to the 50-period simple moving average, our buy-sell line? Price is above, so this means we're only going to be looking to go long because price is above its 50-period. So we're in an overall uptrend. Remember, if the uptrend, the overall uptrend is up, we're not going to short. We will never try to short anything. We'll only look to buy on the pullbacks. Okay? So how do we find the pullbacks? Well, we apply the PET-D, and we see here that we have green bars and then followed by one red bar, and then the next bar turned green. So that's our signal to buy. And look what happened. You have a nice rally to the upside. Then you had one red bar again on this sell-off, followed by a green bar, and look what happened. Extremely simple. This was taken up to last week in NFX. How about to the downside? Well, here's a current chart of LinkedIn. Now, for all intents and purposes, most of the bars here are below the 50-period, so we're looking to go short. Okay? We add the PET-D, and in this instance, we see here that we have some green bars followed by the first red bar. We have some more green bars followed by another red bar, and so on. These are all your places to sell. Had you sold here roughly at 210, look at the nice sell-off that would have occurred. Then we had another rally with green bars followed by a red bar, another small rally followed by another red bar, another. In all these instances, you could have sold. We realized that LinkedIn is an expensive stock. You could have purchased options, or if you were just trading odd lots, you could have taken advantage of this. But these were all places to sell with confirmation using the PET-D tool. How about Twitter? Twitter has been behaving poorly the last month or so. Why? Because it's below its 50-period simple moving average. Okay? There's no reason you should have lost money trading Twitter. Why? Because if you had tried to purchase Twitter, well, then you'd be going out of sync with this rule. If there's one rule I can teach you in this class today, it's to apply the 50-period simple moving average, and if price is below, never try to buy anything. You're only going to try and sell, as in this instance right here. If price is above, never try to short anything. You're only going to try and buy. It's that simple. It's extremely simple, but you see how powerful this is in these examples here that I'm going to be showing you. All right, so we're looking to short Twitter in hindsight. Now, we add the PET-D, and as we can see here, we have most of the bars red, but now we have a small amount of green. So we look for the first red bar, and that's our signal to go short. And then we have another green bar here, followed by one red bar, and we go short again, and look what happens. Okay? Extremely simple. The confirmation is just simply given by a color bar algorithm that tells you when it's time to get in. Now, some of you would say, well, this works on stocks, Steve. I don't trade stocks. Okay, let's show you some E-mini S&P examples here. This was Monday. This was a chart taken from Monday, the 31st, as you see down here in the left-hand corner. And we ask ourselves, coming in on this 5-minute chart, what's the overall trend? Well, the only way to find out is by asking yourselves, where is price in relation to the 50-period simple moving average? Price is above, so we're not even going to consider shorting. We're going to consider going long on pullbacks. So obviously, we add the PET-D, and the majority of the bars are green until we get this small amount of red bars. So we're out of the market, and we're waiting for that first green bar to appear, which it does right here. Okay? You could have had a nice 5 or 6 points in the next half hour or so. If you like to trade longer time frames, well, here's a 60-minute time frame of the E-mini going back a couple of weeks ago. We ask ourselves, where is price on this hourly chart in relation to the 50-period? Price is obviously below, so we're not even going to consider buying E-mini on this time frame. We're only going to look to short it. All right? So we add the PET-D tool. We see that the majority of bars are red, and here's the small amount of green. So we're looking for that first red bar, which is right here, and look what happened after that confirmation. Okay? All right, say you don't trade the E-mini, say you trade the Forex. Well, the same occurrence happens in each market in any time frame. We just showed you daily bars, and we showed you 5-minute bars as well as hourly bars. Here's a daily bar chart of the Australian dollar. We're in an uptrend. Okay? So at this point, we're in a downtrend. Here was the point to sell. You had some really nice movement to the downside, and then once the trend changed upwards, here was your first green bar, and you went straight up. How about the Swiss franc? Well, looking at this example right here, we have the PET-D applied. We're in a downtrend, so every time the first red bar appeared, that's where you would have sold. right there. And then lastly, this works on weekly charts as well. We're in a weekly chart. If we look back here, we are in an uptrend using the euro dollar on a weekly time frame. So we'll see a small amount of red bars. It's the first green bar that tells us to get in after each red bar. So you see how this can be transferred over into any market, in any time frame, and in any direction. Now, let's recap. We showed you a simple but high probability technique for trading pullbacks in all markets. But regardless, if we're looking at the PET D, the main thing we want to instill in you today is never try to pick tops and bottoms, even if you're trading pullbacks within the trend. Always wait for some type of confirmation. Okay? This can be an indicator. This can be a candlestick pattern telling you that the trend has reversed in your direction, or you can wait for price to trade above the previous bar's high if you're going long. But these are points to remember now. Here's what we just showed you with all of the examples. These are not complete strategies. All we did was tell you about where to enter. We didn't talk or spend any time about stop placement. We didn't talk about advanced entry signals. We didn't talk about advanced exit signals. We didn't tell you even where to get out. And we didn't talk about money management. How many shares or how many lots should you be trading? These are all equally important pieces of the puzzle if you want to be trading a strategy. So what we just showed you right now, we're fine-tuning your entries using the PET D as a confirmation technique for trading pullbacks. But you need to know about stop placement. How about where exactly do you enter? Do you enter at the market? Do you have a stop? How do you enter? How do you exit? Where would you exit? We had some great trades there, but where do I get out? And then lastly, how much should I trade? This is all explained in our PET D course, which I want to share with you today. We just went over and showed you how simple it is to use. You can be up and running using the same color bar algorithm by today if you'd like. It's a roadmap for any market. Our proprietary color bar algorithm comes with 4 trading plans. I just shared one of them with you, but I didn't even go into detail. In the course, we go into detail showing you 2 continuation trading techniques and 2 pullback trading techniques, all using the PET D. We also have a trailing stop technique. Remember, you can apply the PET D to any market, any time frame. And then lastly, you get my personal email address where you can contact me whenever you'd like. Now, I know a lot of you would say, well, you know, I kind of get this idea already about pullbacks and confirmation. I really don't think I need this. I can kind of figure it out on my own now. Well, that may be true, but remember, we're an educational company. We want to educate you so that you really fully understand the process. And what happens too many times is that people just jump in without really fully understanding the process. Here's a perfect example of someone that told me about what they tried to copy with our techniques in the IWM or the ETF for the Russell 2000. Now they went to this course, which I gave for free on the internet, and they said, well, okay, Steve said wait for the trend. We're in an uptrend. We're above the 50-period simple moving average, and this is most likely our pullback here. I'm going to wait for price just to trade above there, and I'm going to go long, and it looks pretty good until it falls out a bit. Okay. Plus, they don't have any information that we give in the course about stop placement, about entry, about money management, moving your stop to unchanged. All of that is gone over in the course, and we teach all that to you. So you probably would have lost on this trade trying to figure it out for yourself. If you had the PET D, how could we have traded this trade? Well, it would have been a profitable trade actually, because we apply the PET D, and we see that we're in an uptrend and all the bars are green, but we wait for those few red bars here, okay? So we would not have been in this trade yet until the first green bar. That's where we would have purchased, right here. So even though it would have been roughly around the same price, I can guarantee you that at this point you would have been stopped out and thrown in the towel and taken the loss. But we would have sidestepped this movement altogether, entered here, and you see you would have had a nice profitable trade. This is why we really feel you need all the things that are included in the course so you can really fully understand the process behind the PET D, and you can have it working for you as opposed to just trying to guess and think that you have it all down because you've attended a free presentation. Now, I've given you a lot of great free information today, the 50-period simple moving average rule, how to use that, how to confirm your entries with different indicators or using confirmation. But the PET D is really the way to go if you want that level of consistency. Remember, I've been using this for roughly 30 years, but it wasn't until the last year where we were able to make this into an algorithm and apply it for any time frame in any direction. So it's that easy to use. Now, the reason why we just have this as a proprietary algorithm because it's been so successful, we have hedge funds using this. We also have people that have been trading for a couple of weeks using this, the same tool, and we've had such a great response that most likely sometime this year we're probably going to turn this into type of a leasing mode where you have to lease this 2 or 3 times a year and at a much greater cost. So what we're doing for all the attendees today is still having it a lifetime application. Now, this would normally cost you $12.95. We reduced it down to $9.95, and it's yours to keep for life. We're not going to make you pay $9.95 every 3 or 4 months. It's a lifetime. Ownership once you purchase it. And the best thing is, if you're having trouble meeting that $9.95, we have payment plans now. So you can talk to one of our trading consultants and adjust a payment plan that meets your needs, where you can be paying every month if you like, and everything so that you'll be able to trade with the PET-D as soon as possible. But please remember, this is for a limited time only. You've seen how great it works. The charts I just used were from this past week, even from this past couple of days. And this is how well it works. So it's a great, great tool. If you're serious about taking your trading up to that next level, I strongly urge you to take advantage of this deep discount, especially since we most likely are going to increase the price and go to a licensing fee in the very near future. Now, for more information and questions, you can go to our sister site, which markets and promotes all of my individual strategies and courses. That's protraderstrategies.com. Or you can contact any one of our trading consultants at trading@protraderstrategies.com, or call us directly at area code 310-598-6677. Now, I want to thank you for waiting. I know some of you have some questions, and I'll leave this on the screen right now so you can copy down those numbers and that information. Let me go to the question and answer box here and see what some of the questions were. Yes, this is being recorded, and so you can contact either through the email or the number provided to request a link to this so you can get some more information. Let's see, a question here is, I think the pullback technique is equal to Elliott method. I don't know about your pullback technique, all right or not. Sorry for my little English. Well, basically, Kumar, the pullback technique is simple. It's not something we created. This is the basic guidelines of a pullback is you look for price to be in an overall uptrend. Now, every uptrend doesn't not usually go straight up. It has this kind of a stair-step approach. It's mostly 2 steps forward, 1 step back. So the pullback technique is you want to purchase on that 1 step back because you think it's going to continue on its upward course. The only trouble is most people will find some type of fixed level, or they think it's gone low enough, and then they'll buy, and then it continues to go lower and lower. And then they'll get scared, throw in the towel, and exit with a loss. And it's usually at this time that it turns around and goes back up. So what we want to do is, rather than try and pick a bottom or pick a top if we're shorting, we want to wait for confirmation. And I shared with you the 3 techniques that most people use, and that's great, as well as how to find the overall trend with the 50-period simple moving average. But in my opinion, the easiest way to confirm that the trend has headed in your desired direction is with the PET-D. Okay? The algorithm automatically decides when the short-term trend has changed back in your direction. Okay? Bill Jones asks, I think I've seen this before. This PET-D doesn't work with Thinkorswim, does it? I believe, you know, I believe if it doesn't, we're making plans to have it assigned with Thinkorswim. So, Bill, I would contact any one of our trading consultants. I know what it does definitely work on is TradeStation, Metastock, MT4, and NinjaTrader. So if you have any of those platforms, feel free to use this, and then you can be able to access the PET-D as soon as you like. Carlos asks, don't think that 5-minute chart is so erratic to rely on the 50-period simple moving average. Yes, Carlos, the 50-period simple moving average works in any time frame, in any market. I know a lot of, especially today. Today was a very erratic day so far. It's been erratic going up and down. That's the beauty of the 50-period, because many times it will keep you out of these erratic markets. In other words, where you'll have maybe 3 or 4 bars above, then 3 or 4 bars below. Well, it won't give you enough bars either above or below to have an adequate setup. So because of that, you're not even in the markets. So that's the beauty of the 50-period. You know, you want to have a substantial amount of bars above so that you can formulate some type of setup, you know, some type of pattern recognition or some type of indicator setup. But usually in choppy markets, you'll have 3 or 4 bars above, 3 or 4 below, and that doesn't give you enough time for any type of setup to be generated. And that's perfect. That'll keep us out of these choppy markets. So I use the 50 period in any time frame. I use it even on tick charts. So that's how well it works, okay? Let's see what it's easy. Says when exactly you're entering the first reversal bar? Next day, the end of the first day? This question is basically, once you get the reversal bar, when do you get in? Well, we teach that in the course. I don't want to give the class away. I mean, we teach you high probability entries, and we show you when to get in and when to get out. And there are a number of different ways, either if you're a conservative trader or whether you're a discretionary trader or you're an aggressive trader. So remember, we're an educational company. We want to work with you so that you can apply techniques that fit your persona. Now, some people like to enter right at the market once the confirmation has been generated. Other people want to wait for price to trade above that. Other people place a limit, and we teach you how to do that, all of these things in our courses, okay? So there is no one standard set way because everyone trades differently. And plus, it also has to do with your risk parameters. We teach you where to place your stop, and if you happen to use one of these entry techniques, but it creates larger risk, you won't feel comfortable in that trade. So we'll show you a different technique which will decrease your risk, okay? So there's lots of different ways to trade it. This is the education that I provide for you, once again, from 37 years. Emil asked, do we have a trial? Now, I'm sorry, Emil, we don't, because a lot of people try to reverse engineer our information and stuff. And so, I'm sorry, we don't believe in trials because we've been ripped off a lot with our trials before. All I can tell you is that, you can talk to some of our trading consultants and do Google searches on us and see how well people are pleased with this and any and all of our products. So we don't give trials because we usually give you everything and it's full access right off the bat. People are asking if it works on MT4 or MT5. It works on MT4, NinjaTrader, TradeStation, and Metastock, as you see there. AR is asking how to apply this to my IB trading platform. Will there be future upgrades available for free? And as you see here in the answer box by our trading consultants, it says yes, you can use your IB data to run NinjaTrader for free, and you can run the PET-D on the NinjaTrader as well. So it's lots of different ways to do that. Let's see here. It says, does this give both buy and sell signals? Yes, it all depends in which direction the overall trend is. So if the overall trend is down, then as we just showed you, it will tell you when to enter using that first red bar and vice versa. So there's lots of different ways. You can trade it going long and going short. It's just really has to do with what side of the market you're currently on. But yes, I used it today going short, and yesterday I used it going long. So it doesn't really matter which direction you want to trade. Let's see here. Jillian asked, did you say that we wait for the first green candle to close, then buy the second one? Yes, you can do that, Jillian. That's one of the ways you can trade it. You can wait for the bar to close entirely. If you don't want to, you don't have to wait for it. There's a number of different ways to trade it. Remember, this is just a pullback technique. We give you 4 different trading plans in the course. Some of them are based off of continuation patterns, which have nothing to do with pullback. So there's totally different ways in which to trade. That's the beauty of this. You don't just have to take the pullback way to use the PET-D. I just showed you one way, and without giving away the entire course for free, I can't explain everything. There are a number of ways in which to use it. In fact, students email us and say, I've discovered a different way in which to use it as well. So there's lots of different ways to use it if you'd like. It depends, but we give you 4 distinct course trading plans in the method. Okay. Let's see, David asks, I want to use the PET-D both on my laptop and on my desktop. Do I need to purchase 2? As you see here, sorry, David, yes, but David, we've enabled 2 licenses for you so that you can run it on your laptop and desktop, okay? But unfortunately, yeah, because a lot of people want to do is they'll want to share it, and once again, we've had a lot of people try to take advantage of all the great information and things we're sharing with them. Let me see some more questions here. Can you convert the bars to candlesticks on your system? Yes, it doesn't really matter what you're using. If you're using open, high, low, close bars or candlestick bars, it doesn't matter. All we're looking for is the change in trend, the short-term trend identifier. Now, if you've identified the trend using candlesticks, that's fine. Now, today, once again, I said I used it today. I was looking at candlesticks. All right, so you are able to see the difference with candlesticks and without. The colors change a little bit, but you'll know when the pet D is applied. If you don't want to use candlesticks, you don't have to. Okay. Is it working a one-side market or sideways market also? Well, Kumar, it works in any market. In other words, once you apply the pet D, whether the market is ranging or whether the market is very strongly trending, you will always have bars either red or green. Now, obviously, in a very rangy market, they're going to be skipping back from red to green, red to green, red to green. Okay. But the only trouble is that you're not going to be taking any signals with that because it won't meet any of the trading plans. So that's great. Okay? So you won't have to worry that, well, boy, I keep buying and keep selling. Just because the bars are red or green is not telling you to buy or sell. Now, we have some traders that like to trade that way, but I wouldn't recommend that because it can go back and forth. But what we recommend is to see some type of pattern, either a pullback pattern or a continuation pattern, and then look for the pet D to confirm it. Okay, that's what we're really talking about. Okay, David asked, what is the percent success rate of this indicator? Well, Dave, there's no way. Once again, we would have to keep statistics on every time frame, on every market, and on every direction. Remember, this is just a trend identifier, which we help you to identify in trading pullbacks. It's not a strategy. It's not a system, in other words. You can only get percentages and numbers like that with system. It's like asking, what's the percentage winning percentage rate for a moving average? Well, a moving average is just a tool to tell you, the average of the whatever you're trading. It's the same way with this. This is a trend identifier. It's not a system. So we can't quantify it by saying what the percent correct is. Now, we show you some really great examples, and we work with you and show you actual trades. As I just showed you that happened in the last couple of days, how well this works. In fact, if you don't trust it, follow along in DOW. See how well that will work for you. Follow along with Twitter. We've shown you how you would have had a really nice sell signal in Twitter and how you could have gotten short points ago, lots of points ago. So there's lots of ways. But it's just a high probability tool for fine-tuning your entries in being in sync with the short-term trend. Just the same way some people use moving averages or stochastics. You can't say what's the winning percentage on a stochastic tool because it's not a system. It's just simply a tool to help you. Okay? I hope that answers your question. Jeffrey asked, does it work well with low price or high volume stocks? Yes, it does. All you want to do is find a trend, and we tell you how to do that with our other tools, and then see that this thing is moving. I've worked with people that are looking at $2 and $3 stocks, and you could have really pinpointed some really nice signals with this. Okay, I'm not going to guarantee and says it works with every low price stock, but it works fine. You know the ones after a little practice, which ones it's going to work with better and not, because you'll get this consistency with either the red or green bars. Okay, some low price stocks that jump back and forth a lot, you'll see this red green, so you want to stay away from those. Okay. Let's see. I see here that a lot of people are asking about iPhone and Mac, and my VIP of operations, Brett, is answering your questions on the site, so I'm glad that he's here to answer those, because he will answer most of the technical issues you may have. Anything with actual trading and education, those we refer to me. Are your bars green by net close, open versus close, or does it matter? No, see, they update intra-bar. So in other words, you will see intra-bar a green bar or a red bar have in real time. So that's the beauty of this. It's dynamic. So you can decide whether you want to get in the trade earlier before the close of the bar or not. So let's say you're watching a 5-minute bar and it is starting to turn green, and you know that you only have maybe a few more seconds left. You don't have to wait for that close. You can just jump in if you'd like, but it's really up to you. We show you how to do that. But these change color dynamically while the bar is updating automatically. Okay. The link, Jim asks that the link has a sign up for $12.95 and not $9.95. Is there another link? I would contact that number that you see there, Jim, because we are definitely giving you that discounted price because you're an attendee today. I think that could be just for people that happen to visit our site and maybe have seen something either on the internet and you know, they have to pay full price. But for anyone who is in attendance today and who has you know, come to this presentation, you are definitely subject to getting that discounted $9.95 price. Also, you are subject to getting payment plans. People that just happen to visit our site by accident will not necessarily be able to get the discount price as well. So we offer that because you've attended our presentation. Okay. AR asks, you mentioned specialist trading, now pro trader strategies. That's a good question. Specialist trading is my own individual site where I teach major courses, where I teach roughly courses that cost anywhere from $25,000 to $10,000, okay? Pro Trader Strategies is our sister site, which just handles our individual courses, such as the Pet D or an individual course, because we know that it can get very expensive. We have a number of hedge fund traders or professional traders that like to buy a full box of courses, upwards of 10 in any of our different courses there, where we have stock, we have Forex, and many course packages, which I said can run from anywhere from $2,500 to $10,000. So we're not talking about that today, but that is what I teach at Specialist Trading. Our individual strategies are promoted at Pro Trader Strategies, okay? So that's basically the difference. Let me see. AR is asking, would you send the link? Yes, just contact, you know, AR, I would send an email just to that address and just ask them to send you the link, and I'm sure it will go through. Bill is asking, once again, will this be a recording? Yes, it is, Bill. I know you logged in late, but you can once again go to the link or call us directly, and we will send you that information. Kumar is asking how many days the discount is available. Usually our discounts run roughly about 48 hours. If you've been anyone who's attended my presentations before, you know that each week we give a different presentation with different information and more knowledge and education. So we have a different, such as strategy number 4 maybe, or perhaps we will talk about a Forex strategy. So these usually run for about 48 hours or so. But if you're really serious, I'm sure they can hold it a little bit longer, but most likely you'd have to contact any one of our trading consultants. Well, Kamara asks, if he purchases it, can you teach us the secret? Remember, there's no secret. It's just a proprietary algorithm. We want to keep that in-house. But you'll be able to use it. Remember, it's just, I personally use a few indicators, such as you know, momentum tools. I have no idea what the secret is behind them or how they're constructed. It doesn't matter. They still help me. I use moving averages, and even if I didn't know how a moving average was constructed, if I didn't know how to construct an exponential moving average, I would still use it. It's the same thing with this. There's no real secret. It's just that we want to keep it in-house because it's that popular right now, and it's such a great tool. As we stated, we may most likely license this, and we don't want to just give it away with all the rules, because then it would go away from licensing and everyone would just share it online, okay? Once again, with this discount, it is yours for lifetime, okay? We will not in any way license it or that you have to renew this a year later, okay? So don't feel as if once you purchase this, it's going to have to be renewed again. That's something that we're most likely going to do this year, but we will make announcements to that, and these will only apply to new purchasers of the Pet D. Once you have it, it's yours for life, for $9.95, okay? That's the course. And that comes with the 4 trading plans, with the stop placement plans, and all the information. So it's extremely simple. We show you how to install it. We show you how to use it, and it all comes with the course. So once again, I use this on a daily basis. I've been using it for 30 years, but up until recently, I was only able to use it on daily bars. Because of our programmers, we were able to put it in an algorithm, and that's the beauty of it now. If you're an intraday trader, I showed you those E-mini charts on a 5-minute chart and an hourly chart. Even if you're a weekly trader, I showed you how it works on weekly charts as well. So it's a great tool, great for helping you fine-tune and pinpoint a short-term directional change, okay? So how can we use this? We can use this to get back into pullback trading. We can also use it for continuation trading, okay? In closing now, if you're really serious about taking your trading to the next level, I strongly urge you to take advantage of this. This is a great deep discount here. At $12.95, it's even a great discount, but we've reduced it roughly $300 more. just so that you can get into this. I think the best thing also is that we have payment plans. If you're not able to come up with $9.95, you can construct some type of payment plan that meets your needs with our trading consultants. Remember, this is just for people that have attended. If someone happens to come across our site just over the internet or from word of mouth, they won't be available to get this discount or any of the payment plans. So take advantage of this, and I'm sure you're going to be really happy with it. And you can use it actually for any strategy. Let's say you have a strategy that you currently use right now that perhaps that you put together or you got from another educator, and it's working okay. Well, we really feel we will help to increase your rate of success simply by using the PET D. So you can use it with anything. It's not that it only works for pullback trades. You can use it on a strategy that you use. It doesn't matter if that strategy is based off of indicators, news, or even if it's based off of the tides of the ocean. The PET D will always help you be in sync with the trend. So that's the beauty of this tool, okay? I want to thank you so much. Remember, this was recorded, so if you're interested in getting this recording, contact us through trading@protraderstrategies.com or just simply call us at 310-598-6677. But if you're really serious about taking your trading to the next level, I strongly urge you to take advantage of this deep discount in the PET D for the next couple of days. I use it myself. Do a Google search on us, see how many people are happy with it. Also, before we go into a licensing type fee, this is yours for life. So you can use it on anything at any time, and it's yours to keep. All right? I want to thank you so much for attending today. Thank you so much for coming to our presentations. And I look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.